The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I'm here with two more stocks for your aggressive growth radar screen. This is a very special edition here. Eric Business is our longtime videographer, AV person, all that sort of stuff. He's the leader of the AV club, and he's moving on. And this is the last video I'm going to be doing with him, so I wanted to make it super special. Let him know just how much I care. So I'm going to start with Signet Jewelers. So I want him to start thinking about getting me some jewelry. It's a Zacks rank #1 strong buy. It has got an A for growth, which pretty much all of my growth videos have. A B for value, which isn't always what we see here, but it still makes me smile. It's a very nice little thing. So Signet Jewelers it's obviously a jewelry company, and we're coming on that season where people might be proposing to their significant other. Don't worry, Eric, I'm not proposing to you, nor am I accepting your proposal, should you decide to ask, just so we know. Good history of beating the number. Huge beat here, little beat, nice solid beat there, and another huge beat. So on the average, we're seeing very strong beats here. We love to see that. That tells us that management is able to communicate with Wall Street as to what's coming. They can set the bar appropriately. Look at the move in estimates this quarter, 10 cents to 67 cents. Woo! We're expecting some action in the diamond world. For the year, we're only moving up 21 cents from 340 to 361. I'm sorry, that's for next quarter. So for this full year, we're moving up from 906 to $10.07. That's great. Next year, we're not fully on board with the bull thesis here, but we'll figure it out. It's 751 to 809. Those are still very good numbers to see. Let's move ahead to the valuation. When we look at this name, look at this, 10 times forward earnings, and you couple that with massive growth over the last quarter. There was a 100% top line growth year over year. Quarter over quarter sequential growth, very small there, just 6%, but that's okay. We look at the price to book, 3.7. Value investors they love that 3 number. They want something below 3 on the book multiple. I want something over 1 on the price to sales. It tells me that the market values each incremental sale. And here we have margins going from 5.7 to nearly 9%. We got an NA for the most recent quarter, but I think that number is going to be moving higher, especially when we see that gigantic number in estimates for next quarter. We saw that. All right, so let's take a look at the chart. Here we got the COVID crash. No one's going to get married. Why would you need a diamond? Oh, wait a minute. The world isn't going to end. And wow. I think you're also going to benefit from inflation on a name like this, which is probably one of the things that is kind of an underlying driver, for this sort of name. So still, the valuation looks really good. Don't be afraid of the high price on this stock. And I know that looks like it really bounced up here from 90 to like 110. Looks like that's a $20 move. That's a big recent move. I would think that there's still a good run left in Signet. So keep it on your radar screen. It's tough to buy these things after a big $20 run, but you never know, it might come back in. All right, the next one on our list to keep on your aggressive growth radar is Eric Business's favorite stock of all time. You guessed it, it's Tesla. He hates Tesla. I love Tesla. What are you going to do? Since I do these videos, I do Tesla all the time, kind of, don't I? Maybe a little bit. You've seen it before. You know the story. Who doesn't know the story of Tesla by now? But it's TSLA for the ticker. It's a Zacks rank 1, and that means it's a strong buy. It has an A for growth and an F for value, and that makes me super happy. Look at this. I'll even put eyes in there, like I've got glasses or something. Okay, so yeah, Tesla is definitely, the thing that I love to see, that strong growth score, that weak value score that tells me Growth investors are here. Value investors are not. That's okay. The value investors are just so full of themselves. They think that they know what's up. Growth investors are just chasing the growth. We love it. We want to see more of it. All right, so let's flip ahead to the earnings story here and why in the numbers we like Tesla. Okay, so we see a miss. That's a miss. Then we see a beat and a very solid beat 2 quarters ago, and then last quarter another very good beat. And you can see these numbers are all positive now. Look at all those things. I know I said before that Charlie guy. I'm off the Twitter, no longer a thing there. I don't care. But he used to say if there's 4 quarters in a row, he'll leave the company alone. But I mean, it's always been the fraud you can drive. Anyway, this quarter, $1.46 up to $1.69. You know, it's kind of a blip and up and down there. Next quarter, 153 to 166. This full year going from 512 to just shy of $6 there. Next year going from just shy of $7 to just shy of $8. Kind of, you know, give it a little breather there. Give it a little inch on one side or another. All right, let's. What did I guess I went with this page twice. I wasn't paying attention. All right, so let's take a look at the valuation here. 193 times forward earnings is very, very stiff. 56% top line growth. This is a massively large company, though. You have to keep that in mind. So a 41 times book is going to make any value person go crazy. 24 times sales, that tells you that their sales are worth something more than just their little bit. Here's a real story here. Margins. Look at the improvement in margins, and that number is not going to stop going up until we get in the 20% range. You heard it here first. All right, so 20% range for the margins. So you got a long way of growth to go on those. Let's take a look at the chart. Oh, boy, I did way too many of these. Here's the chart. Here's your collapse in your COVID. No one's going to need an electric car anymore. And then, whoa, and then come back in. This is when Jim Chano said, no, I'm going to switch all my position from stock to puts. And boy, he got a chance to get out. But boy, oh boy, those puts are now completely worthless unless he's, they're just worthless. Chano's guy got wrecked on this one. So did a bunch of others. I've been bullish on this name forever. I've got a Model X in my garage right now. I love it. It's a great car. It's so much fun. It's hard to even let it do the autopilot because it's so much fun to drive. All right, so the story here on this is the earnings just keep on moving up, and we can see now that the trajectory of these lines is really started. You know, before straight. Now it's starting to really move up. Don't be afraid of Tesla up here. That's all I'm going to tell you. Don't be afraid of it. The Cybertruck is coming. There's lots of good things. And I know Eric doesn't like this stock, but it is what it is. It is an aggressive growth name. I want you to keep it on your aggressive growth radar screen. I'm going to show it up here. It's Tesla. I'm going to get rid of those lines. It's TSLA. So that is the last video I'm shooting with Eric. Eric, you've been a great guy, very great friend, great. You're going to continue to be a great friend, but a great videographer, helping me out all the time. Reminded me I didn't shoot my video last week. All right, that's it for me, Brian Boland, the Aggressive Growth Stock Strategist. And make sure you go to Zacks.com/promo to check out all of our most recent promotions. All right, we'll see you again next time.